All you people that are paying way too much in taxes, you know who you are. You're an employee, W-2. You don't own a business. You don't operate a business. You don't collect income as a business. So you barely have any write-offs. You are paying way too much in taxes, and you know you are. So I'm going to teach you something really quickly that I learned in this game in real estate. It's not about earning the money. It's about how much you get to keep. Look, the government's going to tax you no matter what. You're going to go and buy something out there, you're getting sales tax, right? There's retail tax. There's taxes to take your money out of your 401k. There are taxes in, when you have employees. You're paying taxes in your car. You're paying taxes on your house. The government is going to tax you nonetheless. And they're going to tax that dollar that you make at least 2 times before you even get it. It's called federal tax and it's called state tax. And I know a lot of you are like, oh, well, I don't have state tax. Well, you got to pay federal tax. And you got to pay state tax for retail tax. And you got to pay taxes on your car. And you got to pay housing tax. So don't think that, oh, I'm only getting taxed once. You're not. You're getting taxed at least 5 or 6 times on a dollar. For example, I'm looking at a K1 here, right? And if you don't know what a K1 is, it's a schedule. It's a schedule of your income and your losses or your write-offs, and it rolls down into your personal tax returns. When you have a business, a partnership, specifically an LLC, all your partners have a percentage of ownership, right? And each percentage of ownership gets to write off a percentage of the losses or a percentage of the income. It trickles down into called a K1. Why do you do that? It's for protection, right? Because if you don't have company, you cannot write off a lot of the expenses that you're accruing, and you cannot write off a lot of the income that you're collecting. Okay, I know a lot of people are like, oh, I don't earn enough, why should I own a business? Look, any income that you're earning, you should want to write off as much as you can before you get taxed. Before you get taxed. For example, a lot of people earn income and they get taxed at least once or twice on that dollar. 3 times. You're paying Medicare tax, you're paying federal tax, you're paying state tax, you're paying unemployment tax, right? You want to, for a business owner, you get to have whole dollars to spend or to use before you get taxed. That is huge, huge power. It's huge, huge power. So the K1 allows you to do that so that you can pass down all of your income and your losses to your personal tax returns. What does that mean? That means there's so many things that are important in this, because you get to share in all of those losses and income on your personal tax returns. So you can be earning W-2 income and earn $200,000 a year. And then your business could be making $400,000 or $500,000 a year. I'm just throwing numbers out, right? You can have passive losses or losses in your business that can help offset your personal income, okay? Which ultimately lowers your tax bracket in your personal tax bracket, thus lowering how much you get taxed personally. And you get the power of having whole dollars in your business to spend or to use, right? Then compared to having only a fraction of a dollar if you're only a W-2 employee. A K1 also gives you security or anonymity, right? So when people audit you, they don't see your schedule of real estate owned. They don't see any of that. They don't see, oh, you're on this property, that property, da, 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 da. They all they see is the income, and they see all of the losses, okay? So for example, I'm just looking at one of my businesses here, right? I have current year net income losses is $19,000. Is actually the actual number is $18,938. Okay, ending capital amount is a negative $18,938. Okay, did I have a loss for the year? No, I didn't. I actually had like a lot. I earned a lot of money in that business, right? But because of offsetting with your expenses, I'm able to offset this with my schedule K1 to my personal income. So that $18,000 loss offsets the personal income, okay? And also it gives you some privacy or anonymity. So when people look at your tax returns or you get audited, they don't see all the schedules of real estate that you own. All they just see is line items of just this this income and all of these write-offs that get passed down to your personal returns. This happens for every partnership, every partner. You can have 10 partners and they all would have a percentage of shared depreciation, write-offs, and income that gets passed down to your personal returns. This is huge, guys. This is super huge. So if you have not converted into collecting income in your business, you should definitely do that. It's like flipping a switch in your company, in your corporation, or where you're working at. You should ask them. You should ask the accounting department, look, I have a business. I would like to get paid on my business instead of W-2. A lot of them might not be able to set you up like that, but a lot of them can. You just have to educate people, because a lot of people are not educated in this process. They don't understand that, and they're just stuck doing it the way they've always done, because that's the way they've always done it. But just think of it, right? If you work for like a big corporation and they're W-2 employees, corporations pay other businesses. Okay, they don't W-2 other businesses. They pay other businesses by paying other businesses, right? So if you set yourself up to be paid as a business, okay, it's the same way a company would pay another business. You are a business. You could set up a business and get paid, and then through that business you can pay yourself, or you can offset all this income. Okay, I paid zero in taxes for the last couple of years. I've earned tremendous amount of income in the process, but I've offsetted it by paying zero in taxes. However, don't be mistaken. I pay plenty of taxes in real estate taxes, plenty of taxes in real estate taxes, plenty. I pay plenty of tax when I'm buying things. I pay a lot of retail tax. Okay, I pay taxes on this car. I pay taxes on a lot of things. All right, so but paying income tax is one thing that I will fight tooth and nail to be able to offset as much income as possible, and you should. Okay, the rules are there for you to be able to use them. They're there, the provisions are there. You just have to learn the rules, and it's a reward system. You do what the IRS wants you to do, then you will not pay a lot in taxes. If you don't do what the IRS wants you to do, you will pay a lot of taxes. It's really that simple. Anyway, that's it. Hope this helps you guys and get ahead of the game, and know that it's not as much income as you can earn, it's how much you get to keep. That is the most important thing in the world. It's how much you get to keep and pass down for the future generations.